Board committee leadership is the ability to effectively guide and support specialized committees of the board of directors in fulfilling their governance responsibilities, strengthening oversight, and ensuring organizational accountability, strategic alignment, and sustainable value creation. Board committees provide focused expertise in areas such as audit, risk management, finance, governance, remuneration, sustainability, technology, and nominations, enabling boards to address increasingly complex business challenges with greater depth and effectiveness. For modern chief financial officers, CFOs, board committee leadership is a critical executive competency because CFOs frequently serve as principal advisors to these committees, providing financial insight, strategic analysis, enterprise risk assessments, governance support, and performance reporting that influence board decision-making and organizational direction. Leading executive CFO programs emphasize that effective governance increasingly depends on the quality of committee leadership rather than board meetings alone. As organizations confront digital disruption, cybersecurity threats, geopolitical uncertainty, environmental sustainability, regulatory complexity, and stakeholder activism, board committees provide specialized oversight that strengthens governance quality and executive accountability. CFOs play a central role in supporting committee effectiveness by ensuring committees receive timely, accurate, and strategic information that enables informed oversight and decision-making. The primary purpose of board committees is to enhance governance through specialized oversight. Rather than duplicating management responsibilities, committees focus on reviewing strategic issues, monitoring organizational risks, evaluating executive performance, overseeing financial integrity, and ensuring compliance with governance principles. Committees report recommendations to the full board while maintaining independent judgment and objective oversight that supports long-term organizational success. Among the most important board committees is the Audit Committee, which oversees financial reporting integrity, internal controls, external audits, regulatory compliance, accounting policies, and financial governance. CFOs work closely with audit committees by presenting financial statements, discussing accounting judgments, evaluating internal control effectiveness, monitoring compliance issues, and coordinating with internal and external auditors. Transparent communication and analytical rigor strengthen committee confidence while supporting sound financial governance. The Risk Committee has become increasingly significant in today's volatile business environment. Organizations face financial, operational, cybersecurity, geopolitical, technological, climate-related, and reputational risks that require continuous oversight. CFOs provide enterprise risk assessments, scenario planning, stress testing, liquidity analysis, and risk reporting that enable committees to evaluate organizational resilience and ensure alignment between strategic objectives and risk appetite. Effective committee leadership integrates risk management into strategic governance rather than treating risk as a separate compliance exercise. The Finance or Investment Committee oversees capital allocation, financing strategies, mergers and acquisitions, treasury management, major investments, and financial sustainability. CFOs support these committees by presenting investment business cases, capital structure analysis, financing alternatives, valuation models, return on investment assessments, and long-term financial forecasts. Governance discipline ensures that significant financial decisions support sustainable value creation while maintaining prudent financial stewardship. The Governance and Nominations Committee oversees board composition, governance policies, director effectiveness, succession planning, board evaluation, and executive appointments. CFOs contribute by providing organizational capability assessments, leadership succession information, strategic workforce planning, and governance reporting that support board renewal and leadership continuity. Effective governance leadership ensures boards possess appropriate expertise, diversity, independence, and strategic capability to oversee increasingly complex organizations. Many organizations have established compensation or remuneration committees responsible for executive compensation, incentive structures, performance evaluation, and leadership retention. CFOs provide financial performance metrics, long-term incentive analysis, benchmarking data, and compensation modeling that align executive rewards with shareholder interests and long-term strategic objectives. Balanced incentive systems strengthen accountability while discouraging excessive risk-taking and promoting sustainable performance. Environmental, social, and governance (ESG) considerations have expanded the responsibilities of board committees. Sustainability committees increasingly oversee climate strategy, human capital development, diversity and inclusion, ethical governance, cybersecurity, stakeholder engagement, and integrated reporting. CFOs play an increasingly important role by integrating ESG metrics with financial reporting, capital allocation, enterprise risk management, and long-term strategic planning, enabling committees to evaluate sustainable value creation comprehensively. Effective board committee leadership requires clear governance structures and defined responsibilities.
Committee charters establish authority, reporting relationships, meeting frequency, responsibilities, membership criteria, and decision-making processes that support governance effectiveness. CFOs assist in implementing governance frameworks that ensure committee recommendations align with board objectives while maintaining transparency, accountability, and regulatory compliance. Communication between executive management and board committees is fundamental to governance success. CFOs regularly prepare committee reports, executive presentations, investment analyses, financial dashboards, risk assessments, and strategic updates that enable directors to exercise informed oversight. High-quality communication emphasizes clarity, objectivity, transparency, and forward-looking analysis rather than simply historical reporting. Executive leaders who facilitate constructive dialogue strengthen committee effectiveness while improving strategic decision-making. Digital transformation has significantly influenced board committee leadership. Artificial intelligence, advanced analytics, cybersecurity governance, digital platforms, and enterprise dashboards provide committees with real-time access to financial performance, operational metrics, technology investments, risk indicators, ESG performance, and transformation progress. CFOs increasingly leverage digital reporting systems to improve governance transparency, decision quality, and board responsiveness while supporting data-driven oversight. Board committee leadership also contributes to organizational transformation and crisis governance. During major acquisitions, restructuring initiatives, digital transformation programs, cybersecurity incidents, economic crises, or regulatory investigations, committees provide specialized oversight that strengthens governance, discipline, and executive accountability. CFOs coordinate financial reporting, investment governance, stakeholder communication, risk monitoring, and performance measurement that support effective committee oversight throughout periods of organizational change. Strong committee leadership depends upon trust, independence, collaboration, and professional integrity. Directors and executives must engage in constructive challenge while maintaining mutual respect and shared commitment to organizational success. CFOs strengthen these relationships through objective financial analysis, transparent communication, ethical leadership, and evidence-based recommendations that facilitate informed governance decisions and long-term stakeholder confidence. The Global Competency Framework identifies governance, leadership, communication, enterprise risk management, business partnering, strategic thinking, stakeholder management, ethical leadership, and corporate finance as essential competencies for executive finance professionals. Modern CFOs are expected to support board committees through strategic insight, financial stewardship, governance excellence, risk oversight, and collaborative leadership that enhances board effectiveness and sustainable enterprise value creation. In today's increasingly complex and rapidly evolving business environment, board committee leadership has become a cornerstone of effective corporate governance. Organizations whose CFOs successfully support board committees through analytical excellence, governance discipline, strategic communication, enterprise risk management, and collaborative leadership are better positioned to strengthen oversight, improve strategic execution, reinforce stakeholder trust, and achieve sustainable long-term enterprise value creation.